This program is brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say at PennyMac, greatness lives here.
Welcome to The Interest. I'm Mike Savino. The Federal Reserve Board raised rates again on Wednesday, but the bigger news for the mortgage industry is likely Chairman Jerome Powell's thoughts on the housing market.
This difficult correction should put the housing market back into better balance.
The Fed's Open Market Committee approved another 75-point increase. This is because the Fed continues to wrestle with inflation, and the committee is likely to continue raising rates. But the bigger question for those in the mortgage industry is the trickle-down effect on mortgage rates.
For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again.
Powell says he does see signs that the jump in housing prices has cooled demand, allowing the market to catch up. But he also thinks that long-term, we need to see a correction that includes supply improving, and that could take some time.
There was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And, you know, that's a good thing.
Affordability continues to be a problem for millennials and Gen Z shoppers who are also trying to pay down student debt. Coming up, we'll take a look at whether President Joe Biden's loan forgiveness plan would help them out. But first, let's take a look at what's going on with mortgage rates. And unfortunately, they've jumped again. The average rate for the 30-year fix rose by more than a quarter point to 6.29%. The average rate for the 15-year fix followed a similar track to 5.44%. This marks the fifth straight month that mortgage rates have increased, and this trend will likely reverse the improvements that we've seen in home affordability. The MBA says the median mortgage payment fell again in August, making it 3 straight months that affordability improved, but that coincided with rates falling over the summer. The average rate for the 30-year fixed was all the way down to 5.13% on August 19th, but since then, the rates have been on the climb. Coming up, we'll hear from some researchers who looked at whether student loan forgiveness will put more people on a path to homeownership.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nemortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nemortgageexpo.com.
Welcome back. With mortgage rates continuing to surge past 6% and home prices sticking at such a high level, it's hard for first-time homebuyers. Add in student debt, and younger homebuyers might feel like they may never achieve the American dream of owning a home. But would forgiving some of that student debt change that? I had a chance to talk with some researchers from the Urban Institute about what they found.
So right now, the median amount of student debt that borrowers have is around $20,000.
Millennials and Gen Z consumers face hurdles that past generations didn't have to handle when it comes to home buying. Chief among them, student loan debt. President Joe Biden's loan forgiveness plan could be a huge help.
Forgiving $10,000 for borrowers making under $125,000 would be, for a good chunk of people, their full balances.
Biden wants to forgive up to $10,000 for many borrowers, $20,000 for those with Pell Grants. The Urban Institute looked at how that would impact home buying. The study didn't come up with a firm number, but researchers say debt forgiveness would put more people on the path to homeownership.
At the margins, this definitely does have the potential where if student debt was the one thing that was standing in the way for people, which there is evidence to suggest there are households where that is the case, then, a lot of those households could be moved into homeownership.
Forgiveness would obviously reduce a borrower's debt-to-income ratio, but it would also help people save money and possibly improve their credit scores. The Urban Institute also found student loan forgiveness would help cut the racial home ownership gap.
We know Black students are more likely to borrow for their education in general.
But researchers also say forgiveness is a short-term fix to a long-term problem, and we need to find broader solutions to the student debt crisis.
And we also see that people who are struggling with their student debt are struggling with lots of other kinds of debt. And they're not necessarily going to be the types of households that are in a place that they could afford a house if not for their student loan.
Researchers added that the mortgage industry can help make it easier to get a home by changing the way lenders look at student debt.
People have a strong credit history or strong, they're like paying their monthly bills on time, and it's basically just the student debt that is causing the barrier. Thinking of ways to, consider that into mortgage applications.
You can hear more from the Urban Institute's researchers on The Principal, the Mortgage News Network's daily podcast.
On a related note, the U.S. Department of Education says people will be able to apply for loan forgiveness sometime early next month. We'll be right back after a word from our sponsor.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.